How's it going, everybody? Dekmar here from TradeCaster.com. Strap up because we are about to go on a journey, hour-long lesson talking about what are the best long-term investments. If you're new to the day trading, stock trading, or investing world, this is a very hot time because we are in the first bear market we have seen in over 12 years. Yes, that means prices are low. That means we want to take full advantage of the opportunities that are presenting themselves right now. So I did put together this little slideshow talking about what are the best investments, why we want to go long-term at this time, and setting you guys up for a great return in a year, 2 years, 3 years from now. Looking forward to it. Let's dive right in. So, first thing we're going to be talking about is what is a long-term investment. Yes, we got to start with the baby steps, guys. We can't just jump up to the 15th level. We got to start with the foundation before we build our building on up. So, a long-term investment is an account on the asset side of a company's balance sheet that represents the company's investment, including stocks, bonds, real estate, and cash. Long-term investments are assets that a company intends to hold for more than a year. Now, if you guys are knowing me, I am a day trader. I love to day trade. I hop in on stocks, I hop out of stocks. I look for hot momentum, hot moves, hot rips, anything I can do to find that quick dollar, and I absolutely love it. But at the same time, it is awesome and it is so great and important to your portfolio that you diversify. If I can put a chunk of money over in one or two stocks, and in a year and a half from now, I come back and that's doubled and that's tripled, why would I not want to take advantage of that? So a long-term investment, it is simply enough what you believe it is. You're holding a play for over a year or so. And this is allowing us to be able to sit back, allow emotions to get out of us, and not have to worry about this play because we know we're going after safe, smart investments that have a great return. So what are some of the advantages to going long term? Well, let's dive in on this. It takes emotions out of the equation. The data shows you'll almost always be right. Compounding works to your advantage, aka reinvesting. It's really easy for anyone to do. You'll sleep better at night. You'll pay less in taxes. Commissions are an afterthought and your investment risk drops. So let's kind of break these down, just kind of start A all the way to Z really quickly, just so you have a better understanding on why we want to long-term invest. First things first is it takes emotions out. Now, emotions, guys, is everything that ruins us in the stock market. Oh, did I do the right thing? I didn't do the right thing. Oh, I'm going to make some money this time. Oh, this is good. Oh my goodness, why did I hop in on that play? Emotional trading is the quickest way to failure in the stock market, and that's never what you want to do. You know, you want to cut out emotions, and what does a long-term investment do? It allows you to get emotions out because we're not going to be sitting there saying, did I make the right decision? Oh, I definitely did. Oh, I didn't. Oh my goodness, I'm scared. We're not going to do that for a year straight. We do that for a year straight, it's going to be the worst year of our life. So that's why a long-term investment is something that we know is going to have a very high return, something that we know we are almost 99% going to be correct in. And I'm going to show you different strategies on how we know we're going to be coming out on top. So the next point we want to go over is the data will show us we will almost always be right. And the thing we're going to be talking about in the upcoming slides is we've had over 30, 40, 50 bear markets in the past, and there has never been a time that the market has not bounced back. So if we bet on the SPY, if we bet on a good credible company, it's going to bounce back. The reason people lose in the stock market is they start getting emotional and they put money in companies that are gambles. That they say, hey, if this hits, this will turn into something huge. And the thing is, if you want to gamble, go to the casino. If you want to gamble, go to AC, go to Vegas. If you want to make a salary, if you want to have a retirement fund, go with smart investments. Don't just gamble your money away because right here, right now, you want to learn how to build a portfolio, how to have that retirement fund, and how to invest now to be able to get the returns in the future. So don't gamble. Let's look for smart investments where we know the market's going to bounce back and good credible companies are going to follow. Compounding works to your advantage, aka reinvesting. That means if I start making a little bit of money here, after a year I build up, I could switch it over towards a more credible or more active stock. After that, that builds up a little bit. I can throw it back over here. And we just keep building up our money. You ever hear the story about like a guy who traded a paper clip all the way to a house? He traded that paper clip for a pen. And then he traded that pen for a shirt. And then that shirt for this. And next thing you know, he has a car. Then trades the car to the house. And that's kind of what this point is as well. Where we can keep reinvesting our money in a long-term state that it'll just keep growing. And as we make more money, we can move move them to bigger share companies where we could be able to make more money if they have bigger moves. So reinvesting or compounding is absolutely awesome, and that's something that we're going to be diving into as well. Next on up, it's really easy for anyone to do. In day trading, there's going to be a lot. You gotta learn how to read a level 2, momentum, volume, indicators, RSI, all this different stuff. But for a long-term investment, it's as easy as putting it in, sitting it back, and next year you come back and you'll be able to take your money out for a nice return. So that's the thing, we don't have to be watching this 24/7. We don't have to act like this is a full-time job. Oh, what are you? Oh, I'm a long-term investor. That's not, a full-time job. This is where we put our money into this portfolio and we know we're gonna have a nice return. There's not really much for us to do because we're investing into a company. The company's gonna do all the work for us. We're just an investor into it and we're going to be able to get that return in a few months or a few years. You'll sleep better at night. This goes out with point number 1. We aren't going to be emotional. We're not going to have anxiety. We're not going to have our heart racing 24/7. And if we do, stock trading may not be best for you. Now again, when I hop into a day trade, do I have some adrenaline pumping? Absolutely. But for a long-term investment, I don't want to have my heart pumping for a year and a half down the road. I'll probably be dead by the time I even get my investment out of it. So that is why long-term investing is very good, because it is opposite of day trading, where things are a lot more slow, a lot more calm, and we can watch the stock move in a very slow, progressive way. And if we're not liking what we're seeing, we can take it out if we want to. Commissions are an afterthought. We don't gotta worry about commissions, because usually when we're day trading, what are we doing? Hopping in and hopping out, hopping in, hopping out. So it's $5 here, $5 there, $5 here, $5 there. Now, most of the time in 2020, we're not even seeing any sort of brokers with any sort of fees. Now, the premium brokers, yes, those are going to have fees. The one I use, Lightspeed, theirs $4.95 per trade. But with that being said, if you use E-Trade, TD Ameritrade, Robinhood, Webull, whatever the broker you want, there's not even going to be a fee there. So that is an afterthought that we don't even have to worry about. Put our money in, commission free, we're all set to just basically make money. And that's the beautiful thing. And the last point is your investment risk drops. So as long as we are playing stocks that are credible, and all the stocks that we are going to go over today, they're not going to be super secret plays. Because the thing is, we don't want to play super secret plays. We're not playing a casino, we're not playing roulette, we're not playing blackjack right here. We're playing stocks that are at a bargain price right now that we know are going to be moving up in the future, because they are household names. So we want to play stocks that are uptrending for the past 1 year, 2 year, 10 year, 5 year, whatever. And just over this whole entire, bear market that we have right now, that's been dropping them, and now we're going to get bargain prices. So that's all we're looking for. What has been crushed the most in this bear market, or what has been hurt the most, that we are going to be able to take advantage of. So let's talk about right now. What is happening in the current stock market? Well, as you can see, this is a current picture of the SPY. The S&P 500 represents basically the economy, as this is the top 500 companies in the United States. And as you can see, we are climbing, chugging along, and all of a sudden it looks like we just dropped off a cliff. Doesn't it look like that? Where we just have this massive dump and this massive drop. Now, a lot of people look at this and they say, wow, that is scary. I should probably run. I should probably hide. I should probably take the kids and get out of here. No, but as an investor, what do we think? We think this is opportunity. Look how cheap everything has been in such a long time. We don't get these prices every day. So for us, we think about, wow, this is an opportunity where I can get in that we haven't seen for years. And that's where I can make the most money. As I said earlier, one of my absolute favorite sayings is most millionaires will be made during a bear market. Most millionaires are going to come out after a recession. And why is that? Because we are able to get it at prices that we have not been able to see in years. So as you guys can see, the market fell from February 19th to March 23rd, 33%. That was since 2008. We have not seen another bear market. Now, a bear market happens whenever we see a 10% decline from recent highs. And as you can see, that was from over 12 years ago. So these opportunities, why I'm so fired up right now, is we don't see these very often. Every decade, we usually see some sort of bear market, and they're getting larger and larger and larger apart. I'll show you a diagram in a moment on what I mean by this, but this means we need to take advantage of now, because we may not see another bear market until I'm around 40 years old. So I got to take advantage of this hot market that we have. So before we go any further, we have to understand, why did the stock market crash? Why are we in the first bear market in 12 years? And why did we fall 33%? Because to find the best long-term investment, we have to get to the root. We got to get to the bottom of this so we know what stocks to be able to pop on off, because those are going to probably be the solution of the problem. So let's dive in on this and let's talk about it. Now, there is going to be one or two words here I'm going to have to skip, and that's because if I say them, YouTube's going to demonetize it. You'll see in a moment here. So according to the World Health Organization March 9th situation report, the world is closing in on 110,000 confirmed cases, which have led to over 3,800 deaths. What's particularly worrisome is that while China's new confirmed cases has slowed dramatically, new confirmations of the illness are surging in numerous countries around the globe. This includes Italy, which has taken the drastic step of putting the entire country on lockdown, as well as Iran, South Korea, and even the United States. So I cannot say, I'm going to just use the illness, okay? The illness is the reason on why the stock market has fallen 33%. So the illness was the reason on why we are seeing the first bear market, and the illness has spread throughout the whole entire global economy. It's not just the United States, it's every single country that is taking some sort of toll. Some countries are getting it worse than others, but yes, the United States is taking a very hard toll because of this illness. So as we can see right here, we are seeing tons of states on lockdown. Nearly every single state is on lockdown right here. And for an economy to be able to grow, for an economy to be able to climb, we need to have businesses out there working. So this just gets us a great understanding on how much we have been affected and how many states and how many countries throughout the whole entire world are facing things just like we are. So the global economy is down, the United States market's down, and state after state after state are on lockdown, where we can't go out and work and produce and spend and be able to stimulate our own economy. I know I'm getting fired up. Stick with me here, ladies and gentlemen. So what has been shut down? Anything that's non-essential has been shut down. So restaurants have been shut down. We know these bars, these retail stores, barber shops, etc. Right? Everything has been shut down that's going to bring in any sort of social gathering. As you guys can see in this diagram right here, the economy is going to have a life cycle, and at any point we are in one of the 4 different parts of this life cycle. We have the peak, we are having the contraction, we are having the trough, and we are having the expansion. Now, we were just in the peak, and now it's going to vary on where traders are thinking where we are now. Are we only in the contraction, where we still have farther to go before we reach the trough? Or did we just get the bounce from the trough, and now we're working our way back up to expansion? So it is kind of up to you on where we're at, because no one knows exactly for sure, but at some point we are always in this circle. So here's a little diagram of some of our past recessions and where we currently are right now. So our global recession could be right around the corner. We had 1981, we had 2001, and we had 2008. And while there are some little funny diagrams right here, this is accurate information to understand how hard the market is falling, to know that we are right next to the dot-com recession. We are right next to the housing market recession. And now again, having this illness recession, this could be the next big one. So we want to be aware of it. So, history of the bear markets now. Well, the history of bear markets and the history of bull markets. The average bull market lasts 9.1 years. And that's over the past 100 years, with an average return of 476%. Now, the average bear market is 1.4 years, with an average loss of 41%. Now, this is statistics over the past 100 years. And now just think about what I just read. So an average bull market is going to last 9 years, and the one we just had lasted 12 years. Now the average bear market we have is 1.4 years, with an average pullback of around 41%. So that means after this bear market, we may not see another one until 2030 plus. And that's why we have to take advantage of what we're seeing right now. So this is the past bear market history with all our bull markets as well. But notice what's the big thing right here. Look how explosive these bull markets are. Every single little bear market is one tiny little pullback. That's so cool. So we are seeing the littlest little pullbacks on these bear markets. And look after we have the bear markets, an absolute explosion. And it's after bear market, big time rip. So if we are getting one of these opportunities right now where we have one of these little orange pullbacks, we need to take advantage because we know what is going to be coming on up. As I said, we have had multiple bear markets in the past, and as you can see, there has never been a bear market we have not recovered from. And that's the most beautiful thing right now. So why buy during a bear market? Well, that's something that we need to understand and something that we kind of have to get out of our regular instincts of a bear market is bad. Now, I understand a bear market, that is where the markets fall, but this is the time we want to invest. I know people see bear market, recession, you want to go to the bank, grab all your money, stick it under your mattress and try to keep it there. You want to hold as much money as you possibly can because you don't know how long a bear market's going to last. You just want to say, please let me keep my job, I got to keep food on the table. All definitely very understandable things, but we got to think different here. We're in an opportunity we're not going to see in another 10 years. We have something, an opportunity right here where we have prices at bargain lows. So before the current correction, there has been 37 declines since 1950 with a 10% pullback or more. So a 10% pullback, as we talked about, was going to be a bear market. And while they only lasted, some of them, 3.5 months, and if you were completely unlucky and bought at the very top, or if you were completely lucky and bought at the very bottom, you would have made money either way, as there has never been a bear market that SPY has never recovered from. So that is an awesome statistic right there. 37 declines. Doesn't matter if you were at the very peak or if you're at the very bottom and got lucky. No matter what, as long as you held your investment, you came out on top. So now is the magic question. How do we know what to buy right now? Because when you think about it, how many stocks are listed on the NASDAQ New York Stock Exchange available for purchase? Well, there's over 7,300. 7,300! How am I supposed to pick which stock I'm supposed to be getting involved with right now? Well, the thing is, we got to think for a second. All right, let's think. What has been the most affected since this illness has happened? So the illness has happened, market has dropped, we had social distancing, haven't been able to do anything. What has been affected the most? Because we want to see which one's the most credible, but had the biggest punch in the face. Which one had the biggest pullback towards it? And when I think about social distancing, not being able to do anything, not being able to go out, not being able to travel, that's it. Right there, right? So the travel industry, if that's been airlines, if that's been cruises, if that's been shipping countries, we got to think about it. Has anyone gone on a vacation during this whole illness time? No one's going on vacation right now. Yes, I understand airline tickets are only like $38 because they're just not trying to go under. They're just trying to make any sort of profit they can right now because guess what? They got to pay for maintenance on their planes. They're going to have to pay for their hangars. They got to pay their employees, their pilots, everyone that takes care of their planes, and they are losing tons of money. Cruise lines. Does anyone want to go on a cruise line right now? Every single time I turn on the news, I hear, hey, Norwegian, Princess, Carnival is trapped out, outside of San Francisco. One person got and then what happened? Now everyone is sitting inside, not having a good time because they can't go back to shore to release it out to the world. Right? Shipping companies. I ordered something, I overnight shipped something December 18th. Well, it's almost April 20th and I still don't have it yet. They say, oh, we'll ship it to you on April 28th. So the thing is, no one's been getting any sort of packages right now, and once the world opens up, guess what's going to happen? The amount of global demand and businesses shipping all over each other, that is going to be very wild and very crazy as well. So let's dive in on these, and let's start getting some exact tickers and some exact companies you may want to start looking at to invest in long term. So last slide before we get into the tickers. I know I'm leaving you guys on a cliffhanger. I apologize. I'm sorry. But let's go over what this diagram is right here. This is a chain reaction. Basically a domino effect on how one thing wrong can spiderweb all the way on down to multiple things getting affected. So for instance, if we have the illness is going to cause people not traveling or jumping on planes. Now, people not traveling or jumping on planes means no one's staying at hotels. And if no one's staying at hotels at these tourist destinations, no one's going to be going to restaurants or family-owned businesses that thrive off of tourists. And it keeps going down and down and down and down, and all these companies are going to be affected. So if we don't have companies making money, people spending money, guess what happens to our economy? And that is where we are currently at right here. So you may have put this together, but airlines is definitely going to be a long-term investment you want to get involved with. It is going to be 100% what I'm going to be getting involved with, and I see this as a very low risk and a medium return. Now, everything I say, I want to back it up with credibility, and low risk is for many different reasons. We're going to dive into that in 1 second, but I don't want to say a high return because I don't know if this is going to turn you into a multi-millionaire, but I want to say a medium return because there is so much potential on these and how low they are right now. You guys are going to see in a second. We'll talk about it a little bit more. But with that being said, if you want to go invest in airlines, these are my top favorite. We have BA, Boeing Airlines, UAL, United Airlines, DAL, Delta Airlines, SAVE, Spirit Airlines, and JBLU, JetBlue. As I said, these are household names, but there are so many different companies out there. You want to know which stocks are currently low, that are credible, that are going to be able to bounce back. So this article right here is from CNN Business. This is a crisis. Airlines face a $113 billion hit from the illness. Now, with that being said, you couldn't pay me to go onto a plane right now. And that is because no one wants to get sick. No one wants to sit inside a little tube area for 2.5 hours going to their destination. I actually went onto a plane the first week that this started coming out on the news. And I'll be honest, I was a little paranoid. I was a little, had a little anxiety. I'm sitting right against my window seat, just staring at everyone, making sure that, I'm kind of dipping and dodging. You hear one person sneeze 4 rows back and just, get me out of here! I want to go home! So it's not really a very enjoyable experience being inside this little plane at this time. So with that being said, no one's traveling around right now. Everyone's waiting for this to pass over. But the thing is, it will pass over. And people are going to forget about this and going to go on their merry way life. Once summer comes around, and if this ends today, if this ends tomorrow, if this ends next week, or if this ends next month, people are going to start traveling again and go to Florida and go to California and go to New York and go to different countries, and wherever you want to go, people are going to jump on planes. We've had things just like this, not in this severe, but we've had SARS and Ebola and all these different types of random diseases that did affect the airline industry. And once again, they all bounce back. So this is why, I'm personally believing we are going to be able to see the airline industry come back. And one of the biggest factors on why I believe it is right here. CNBC, U.S. Airlines Treasury Department reach agreement in billions in aid. Think about this for a moment. The government is not going to allow these airlines to go under, because we need these airlines for shipping and we need these airlines for transportation and travel. So we have right here Delta, America, JetBlue, Southwest. They said they reached a portion of $25 billion in payroll grants to help weather these very bad conditions. So the government is paying them billions of dollars to help them with their hangars and their maintenance and their employees and their pilots and everything along these lines. The government is help funding them so they stay afloat. Now that doesn't mean they're going to be spiking on up. They're still having trouble as a company, but with that being said, they're not going to be going out of business because they're so crucial to our economy that the government will step in and help them out. So let's look at some of these charts and you guys can see what I mean right here. So first thing we have is BA, Boeing. And Boeing is the supplier to all these different airlines. They create the planes and send them out to these airlines to go fly and bring their customers. So Boeing, over the past year, we could see we're sitting around $350 average per price. Now where are we at right now? $142 per share. And about 2.5 weeks ago, we were underneath $100 per share. Talk about a steal. Now this is over the past year. You can look at this chart and you can see it was even higher at points. But the thing is, having about a $350 per share total over the past year and now being at $142, talk about a steal. This is a bargain where this is going to be able to bounce back up in the future. And if we look at these airlines, Delta Airlines, it is the same story. Look how they've gotten absolutely crushed over the past 2 months, but look at where they were. And once this blows over, what do you think's happening? They're bouncing right back up. Once people start traveling, they're bouncing right back on up. We have United Airlines going from $80 all the way down to $20. $80 to $20, and being able to hold this and seeing it get back up to 80 in about a year from now, that's going to be a huge return. So you put in, let's say $20,000 at $20, $1,000 per share, goes all the way up to 80 bucks. You're going to be making a very nice 60K profit within a year. So that is the most beautiful thing about these airline companies. So recap, these airlines, obviously no one's traveling right now, so they are getting a very big hit. With that being said, once it blows over, people are going to travel once again. People are not going to socially isolate themselves forever. And with that being said, also, the government's not allowing them to go under. So this is one of my top choices. People are going to travel once again. COVID-19 and airlines will pick back up or even higher, and they also have that government bailout. So this is one of my top picks. I definitely want everyone to be aware of airlines, something that's absolutely crucial for your long-term investing. After that, we are going to move over to cruise lines. Now, cruise lines are going to be medium risk and medium reward. And just like as I stated before, I'm going to let you guys know why I believe they're medium risk and medium reward, but what would be the tickers? Well, we got RCL, Royal Caribbean Cruise Lines. We are going to have NCLH, which is going to be Norwegian Cruise Lines, and CCL, Carnival Cruise Lines. Again, all household names. And all these cruise lines at this moment did drop very hard, just like the airline industry. You can turn on the news right now, as I stated before, and you will see a lot of these cruises can't come into dock. They can't come in after their vacations right now because what's happening? Because one person gets sick and they don't want to release it back into the country. So all these cruise lines are just trapping all their customers inside their hotels or inside their rooms. And it's not like what you see on TV right now. I know, again, someone would probably say the joke, I wouldn't mind getting stuck on a cruise, you know what I mean, buddy? Pretty good time. And it's not like that. You know, if you ever been on a cruise before, the rooms are very tiny. They're very small. You ever see the Titanic? Yeah, you're staying where Jack stayed. All right, so being stuck in these rooms and someone just dropping food off, you know, in front of your door, you're not up at the top deck going through the water slides and the flow router, some guy with a suit, you know, on one leg giving you a martini. No, that's not what they're like, you know, partying up over there. They're all stuck in their rooms. So cruise lines are taking an absolute beating because no one wants to go on them. So they're medium risk and medium reward. And you're saying, whoa, Deck, wait a minute. You said before that airlines were low risk. So why are cruise lines a little bit more of a medium risk? Well, let's talk about it. Let's dive into it a little bit more. As you can see right here, Royal Caribbean, Norwegian Cruise Line, and Carnival Corp stops are all at rocks again today. They've been hitting rock bottom. And these are, again, where you hear rock bottom, you say, oh, I want to stay away. But as an investor, we think light bulb, this could be a great bargain price. So, Royal Caribbean has gone from around $120 per share all the way down towards around $30 per share. Look how much opportunity we have to come back. It looks like the same exact charts as the airlines. We have Carnival Cruise Lines getting absolutely crushed from around $45 per share all the way down towards around $10 per share. And look how high we were. And just like we talked about with airlines, this will blow over. And guess what? People will go back on cruises. But the thing is, it may take a little bit longer. Norwegian Cruise Lines right here getting destroyed. Look at jumping off a cliff all the way from around $50 towards $11 as well. So these have been getting crushed over and over and over again. Now let's think about it. Why would these be medium risk? Why would these be medium risk? Well, the reason that we had low risk on airlines is because we had the government bailout. Well, if we think about this, they won't have the government bailout. And that's what makes them a little bit more risky. So the only real reason that these are medium risk plays is the government doesn't care about cruise lines. The government cares about, yes, airlines, because that's how they do transportation. That's how we have tons of shipping. That's how we stimulate the economy so much. We don't really care that much about cruise lines. Cruise lines, it's not like people are like, yo, I'm gonna travel from here to here on a cruise line all the time. Now again, some people may do that, but airlines are much more important to our economy. To be able to travel, to be able to transport different items, to be able to ship everything along these lines, airlines is crucial. Cruises, that's, you know, a little fun thing that people do. So the government doesn't need to step in on this. And also on top of that, cruise lines and the government don't really have a great, you know, relationship to begin with. If you kind of think about it, cruise lines are on international waters. And a lot of times there is a little bit of a feud and a little bit of confusion on do they have to pay taxes or not. Because they say, hey, we're on international waters. We don't have to pay United States taxes. So why would the government want to step in and help them out? If you guys ever been on a cruise, sometimes there's casinos on cruise lines. And you might dock, let's say, in New York or New Jersey. You might dock in Miami. You might dock in San Diego, California, something along these lines where they don't allow gambling. So how do you have a cruise line with a casino if you dock and you can't even gamble? Well, once they go out to sea, they're not in the United States anymore. They're in international waters where gambling is legal. So the thing is, they kind of go off the same exact thing. Say, hey, we don't need to pay our taxes right here. We're in international waters, right? That's where our business is, international waters, not here. So you think the government is going to step in and try to bail them out whatsoever? So that's why they are medium risk. That's why these are a little bit tougher to say, all right, let me hop in and let me hold tight, because there is the potential for them to drop lower. And the thing is, when they drop lower, you could be getting a better bargain price, but you need to understand right here that it is a little bit tricky. It's a little bit tricky to know where they're going to be going next, of course. So what else can we be looking at? Well, we've gone over two different sectors so far, if that's been airlines and that's been cruises, but we can also think about another very important thing. We've looked at stocks that were up high that dropped very low. Maybe we're looking at this all wrong, right? Maybe we're looking at all this all wrong. Maybe we should be looking at stocks that are down low that could be possible shooting on up. Well, what would that be? Well, that would be the solution to the problem. And what's our problem? The problem is this illness. So what would be a solution to the problem? Vaccines. So vaccines right here, these are going to be the solution to why the markets have dropped. And when we talk about vaccines, there are three big companies that stick out. And these three companies are going to be mRNA, SNY, INO. These three companies are the top runners to be able to make some sort of vaccine for this illness, for the reason the market fell, for the reason we're in a bear market for the past 12 years. And if one of these companies can come out with something that can solve and cure and help people, well, this is going to turn you into a multi-millionaire. Because guess what? This is affecting the whole entire world. And if there is some sort of cure, guess how many people are going to be lining up for this? Millions to billions, and you could be making tons of money. So these are going to be high reward, but with high risk, because it's not easy to come up with any sort of cure or some sort of vaccine. This is not one that you want to be like, hey, I'm just throwing all my money in and hoping. No, because there is a little bit of a gamble, but we have to talk about it, right? We have to talk about this one. So first things first is going to be mRNA. This is a little article of mRNA. It's based out of Massachusetts. And what we have right here is they are one of the top runners on mRNA. They just finished phase 1 trials and moving over to human trials already, which they are moving at a very fast pace. mRNA, you definitely want to be looking at this chart and looking at this play. This is also the one that the president, Donald Trump, he is the one that enforces the most as well. A lot of the times in his speeches, you'll be hearing him refer to mRNA or Moderna Therapeutics. So saying, oh, they're moving at a great pace, they have a lot of funding, they are going to be one of the top competitors and the top-notch vaccine companies to be watching. So mRNA, this one has been moving up very nicely. And as you can see, over, back in August of last year, this was only around, $10 per share. Well, now it's all the way up towards around $40 per share because people are getting excited. And they say, hey, you know what? If I nailed this one, if I absolutely crushed this one, I could turn into a multi-millionaire. So people are going after mRNA because they're saying, hey, if this ever came out with the vaccine, I'm set for life. And that's why mRNA is so important. So we have right here, phase 2 trials could begin before spring is out, a riskier buy that could easily reap massive rewards. And it's very kind of easy to put the puzzle pieces together and think about and be able to say, we have phase 2 trials coming on up. The president is endorsing them. We have, we could be able to reap massive rewards if we nail it. So mRNA, definitely a top contender, something you want to be looking at. After that, we also have SNY, which is Sanofi. And Sanofi, they really got on the map because they were the first ones to be able to come up with a vaccine for SARS, I believe back in 2003. So SNY is definitely a top contender to see if they can do it again. See if they can come up with some sort of vaccine and beat out the rest of the competition. So SNY, a great ticker that you would want to be looking at. And SNY right here, this is not going to be one like mRNA where everyone's flooding into it because this is a little bit more of the underdog. But with that being said, it's a great credible company and it's one you want to be watching out for. We also have INO. Now, INO stands out a lot because Bill Gates funds them. And Bill Gates, top 5 wealthiest men in the world, he is basically going to be able to give them unlimited resources to do anything that they need. And that's why INO stands out so much in the bunch as well. Because when we look at INO, we say, all right, INO, decent play, not too bad. Oh wait, Bill Gates is funding them, a man that has unlimited resources and a man that's a multi-billionaire. If he wants to fund INO, that could definitely lead towards a very strong chance of coming out on top, because I think the wealthiest man in the world, he's going to be going into the one that he believes is the top runner. So INO, definitely one you want to watch. We do have a little bit more of a spike on INO, and this is a little bit of a smaller one with only $7 per share. So it's something that you can definitely look forward to because you can afford this one very easily. So the big question is, now, when do we buy these stocks? When do we get involved with these plays? Do I hop off this YouTube video right now and start buying right away? Well, it really depends on when you are watching this video. Right now it is April 18th, and coming up very shortly in about the next week and a half is we have earnings season. Now, the first thing we have to talk about is what is earnings, especially if you are new to the stock market. This is where I may start lose you a little bit because you don't know what earnings are. And simply enough, an earnings is a quarterly report. So we are going to have 4 different quarters throughout a year, and we are going to have 4 different earnings reports. It's broken up into every 3 months. So we get an update from the company that tells us how the company is doing. And as you can imagine, for over the past 2 months, this earnings most likely is not going to be very good. So the big earnings reports that we want to be looking at are going to be in the last 2 weeks of April. Now here are some different screenshots of some very popular companies, and this is where you can find them right on Yahoo Finance. So this is Apple right here, and as you guys can see, Apple is going to be coming out with their earnings right on April 30th. As we move on, Tesla is going to be coming out with their earnings April 22nd to April 27th, somewhere in that range. We don't have the exact date yet. And we also have Boeing, BA. They're going to be coming out with their earnings on April 29th. Now, this is also the very big time that a lot of traders are saying the SPY is going to be having their very big pullback. Because if we have 7,000 companies coming out with their earnings, and over the past 2 months, none of these earnings are going to be good, that is going to be a very big punch to the SPY and bring the economy back on down. Now, I know some people are going to say, oh, it's already priced in. Some people are going to say that's going to be the next leg on down. It's really up to you to decide, but that is going to be when I'm going to want to be buying in on my long-term plays, because the last thing I want to do is hop into BA and all of a sudden BA comes out with bad earnings and it drops even lower. So the big thing is, why not just wait until the earnings come out? You know, if you're saying they're already priced in and the price has already led to the big time drop, well, when earnings come out and they're going to be negative, which 9 out of 10 of these earnings reports will be, it's not like it's going to spike on up from bad. It's just going to stay even. So there's no harm in waiting for earnings. It's not like BA is going to come out and be like, hey, we have lost a ton of money. We've lost a ton of business. We've lost a ton of this. And everyone goes, hey, it's going to shoot on up. No, if anything, it'll stay at where it is or it's going to drop down. But the last thing I want to do is buy in these companies right now, tomorrow, the next day, and then not be aware of the earnings report that's going to be hitting us really hard in the next 2 weeks. So earnings season is when I want to start getting involved with these companies and make sure whatever stock you like, you're looking at when the earnings is and then looking to buy right after that negative results so you get the best price possible. So quickly, let's go into a review on what we've learned so far. We have gone into long-term investments on airlines, cruise lines, and on vaccines. We also discussed when we should be getting involved with them, which is the last week of earnings season, which should be the last week of April. With that being said, we have 2 long-term investments left. One of them, the last one we're going to be going over, has never lost as a long-term investment. Yes, this is a great play that you may want to be getting involved with. We'll go over that in a moment. But before we do, let's talk about this next one, which is going to be crude oil. Crude oil is currently at an 18-year low. It is an absolute great bargain price right now, and oil is always going to be something that is going to be very relevant. So if we take a look right here from MarketWatch, US oil prices settle at the lowest it's been for more than 18 years. 18 years. Last time, oil was this low, I was only a little kid. So that's why I get so fired up about being in a bear market, because I've never seen these type of low prices before. And once 10, 12 years go by, I could be a multi-millionaire by that time from getting in on these plays now. So if we look over on crude oil, look at this chart. We could see back in 1940 we were around this price, back in 1970 we were around this price, back in 1996 we're at this price, and then in 2020 we're currently at this price. Look how ginormous these spikes were, all the way up towards around $160, $140, $100. So buying in on crude oil right now is an absolute bargain. I don't want you guys to miss out on these awesome plays. You gotta be watching them. If you hold long enough, you're gonna be coming out on top. So the tickers to be watching for crude oil is going to be \CL. That would be the crude oil future. We also want to be looking at WTI, which is a little penny stock ETF for crude oil, and also USO, which is the United States Oil Fund. So if we look at these charts right here, USO all the way up towards around $12, $13, now all the way back down towards around $4. We're seeing WTI, little tiny guy if you only have limited funds, at around $195. And then last but not least, we have our actual oil, crude oil right here. Just another diagram of what I showed you guys a little bit earlier from before. So this takes us to our last long-term investment, and the last long-term investment, as I said, has never taken a loss. Yes, there's been dips, yes, there's been pullbacks, but from decade, as long as you held, you have been able to come out on top. And which one is this? Boom! It is the US of A, the stars and bars, the home of the free and the land of the brave. La, da, 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 da. So with that being said, yes, the US of A, bet on the United States economy, the SPY. We talked about this earlier, didn't we, guys? Where we said we've seen over 37 bear markets and not once have we not recovered, right? So if you want to bet on the SPY, which is the top 500 companies in the United States, that basically breaks up our economy economy, you can go ahead and look into that as well. So the SPY right here, this is what you would want to be looking at. Same as all the other plays we talked about, massive pullback and starting to get a bounce back on up. I hope you guys again took this information, learned a lot from it, and you guys are ready to go ahead and become long-term investors. If you guys want to day trade with me live, I do trade every day over our live stream on tradecaster.com. Click the link in the description below and you'll be able to get a free 7-day pass. It's absolutely free. Sign up. If you're not 100% happy with the trial, you can cancel within the trial with no payment due whatsoever. But at least try it out. It's 100% free and I look forward to working with you guys. That is tradecaster.com. I wish you guys the best on all your long-term investments. And with that being said, I'll see you guys in the next video. Please like, subscribe, and I'll see you guys then.